Yes, friends. Today we are going to talk about how to maximize your income with existing and new income streams. What should be the way to increase or to maximize your net profit, your net income, not your gross income, your net income. I hope you understand the difference between gross and net. So gross is what you take either as what you get as a salary or whatnot, and then net is after taking out all the expenses. And one of the expense is really your tax. So somebody asked me, what is the best way to improve or maximize my income? I thought I'd share some thoughts with you. So this is going to be pretty interesting video, and it entails some of my personal experiences and a lot of learnings I have from different people. I'm not giving you a tax advice. This is rather a business strategy, and I'm going to share that with you. Please do discuss this strategy and comment on this video with your ideas, because you all have lots and lots of ideas, and I like to learn from you as well. And then if you like it, please subscribe and propagate, because we need to really benefit each other. That's kind of the thought I have. That's the reason I share these learning life lessons with you guys. And I hope you share further life lessons and make this as a learning process for all of us. Basically, first of all, if you are working for a company and if you are a W-2 employee, first of all, you should really have a secondary income. So let's call the primary income as a active income, and then let's call it a passive income. That passive income could be a consultancy, participating in the stock market, because when you are actually doing stocks, you are actually doing another business. Or if you have a property, or if you provide any kind of help. So my first advice to you is that you do have a secondary passive income, whether that is providing us intellectual resource or providing any kind of passive method to people where you are earning something. Now, what would you do to maximize your net income? There's one way that you can just take all that as an income and report in your taxes, and hence your tax bracket will go up. Now, when you are doing a secondary income stream, you're actually benefiting the economy. You're participating in the economy more. So that's a good thing. There's nothing wrong with that. And that you're also helping your personal wealth and your family wealth and health. If you want to maximize your profit and you also want to protect yourself, my advice is that instead of taking that income as a personal income, you basically set up a company. Why set up a company? Because when you set up a company, there are two major benefits. A, you're putting a third party. When you set up a company, whether that is an LLC, S corporation, or even C corporation, I would not advise to set up a C corporation if you are doing something small or even moderate, because C corporation then becomes a little bit farther entity. It provides you more protection, but then it also duplicate your paperwork and even increase your taxes. To avoid double taxation and a lot of paperwork, you should start from either DBA, which is doing business as. It could still be like if my last name is Sheikh and I say Sheikh Consultancies, and then you just record that register that with your town where you're living. So that is a business as well. That is a separate entity as well. DBA Sheikh is different than Rashid Sheikh, but it does not provide you a separate entity. My advice would be to set up either an LLC or S corporation. There are differences, advantages and disadvantages. And if you are a single person LLC or S corporation, there's not much difference. I'm not going to have this session about that. You should talk to an accountant if you really want to understand, or you should do research yourself, or we can set up another video for that. This is not the purpose of this video. This video is that how do you really maximize your net income? And then what you do is basically either register your business with the town, and that's very simple. You go to the clerk's office and just sign a form and pay $10 or whatever fee they have, and now here you are with DBA setup. Or if you set up LLC or S corporation, it's a little more paperwork, but you can do it on your own. You don't really have to go to an accountant. You can, but you don't really have to go to a tax attorney or a corporate attorney or an accountant. You can do it on your own with a little bit of research. There are lots of ways. I actually try to do it myself. Now, the first benefit of setting up the company is that a company is a separate entity, a separate person. So now when that company company does a business, if a liability comes, that liability is on the company first before the liability comes on you. So it's very important to set up a company for that purpose. The second benefit is that all the expenses you are doing to earn that business, that could be a marketing cost, that could be a travel cost, that could be an advertising cost, that could be a third party cost, or that could be goods and services, whatever you're doing. And that is also a better accounting, that you're separating, you're not mixing personal with the business. It's easy for a tax return, and also you have a better record. So you should set up a company. And once you set up that company, now the car you're using, the portion of the house you're using, the time you're using, the meals you're taking in that time, or all any expenses you're doing. For example, you have a rental income and you have set up a separate company for the rental income. Well, first of all, your liability of the rental income, if somebody sues you or something, is on that particular entity, on that company, instead of being on you. Then all the expenses you can easily separate. There is another benefit of rental income, is that you can depreciate that property, because you could have a 20 or 30 year depreciation. For that, you need an accountant, or you can do research yourself. Now, let's say you bought a property for 100,000 and you have a 30 year depreciation, a 20 year depreciation, depends on the property, what year, number of years of depreciation. Now, every year you're depreciating the asset, and hence that amount is going out of your income. So your income becomes less. Now, all the work you do on that property, the taxes you pay, the maintenance you do, the insurance you pay, the car you drive to go there to check things out, all those things get deducted from your income. Likewise, if you're a doctor and I was just having a discussion with a doctor friend, and he had not set up a separate entity. So I advised him to separate a separate entity, because he was also doing some locums, some night job, some secondary job. So he was just taking it personal. So I told him to set up a separate company, which he did. And now he's able to put his car, of course he has multiple cars, he put one car for that whenever he goes to do the locum. That car is totally go from that income. He has an office, he has insurance, he has an accountant, he has other things. All those expenses goes toward that. And now if he was making $100,000 as a secondary income, he may be even just breaking even or making a small income. That's all kosher. It's all good. You certainly can take some advice. I'm sure when you do your taxes, your accountant will tell you what you can and you cannot claim. I'm giving you a business idea that you should set up a company. There are benefits to do that. Even if you're a W-2 employee, you should do some 1099 work. This is all 1099 work. Or you could use any other form. Again, I'm not an accountant. I'm not giving you accounting advice. I'm just giving you overall business strategy that you should set up some passive way, some secondary way of income, and then how you should protect that income by utilizing all of your expenses and putting it against that income. Now, let's say you say, oh, well, I don't have a whole lot of income when I set up the business. And so what's the benefit? First benefit is that you are starting a new journey. So God forbid something happened and you don't have a job, you have something to rely on, and you actually also building a business, and you're building a brand, and it takes time to build a brand. You put a seed today, it's not going to become a tree the very first year. It's going to take time. And IRS understand that too. Tax entities understand that too. So if the first year you are in a hole, mean you have a negative income, second year you have a negative income, third year you have a negative income, it's all understood that it's going up slowly, it's growing. There is a benefit. So you had all those expenses. If you did not build the entity, if you did not set up a business, then all those expenses are going to come on you in your income. Whereas now you are setting up that as a separate entity, and now you can write off some of those expenses. Even if a lot of our friends invest their time in stock market, they can set up a separate company to do that. Certainly that's not my focus, so I don't do that. But those who do not have a property and rather have stocks, they can do that too, and then they can actually utilize those expenses toward that income. So yes, if the first a year or two you did not have a positive income and your expenses are high, it's understandable. Once again, you will talk to an accountant and discuss that what you should and should not use for that income. But that's an idea, a strategy to go in that direction, that A, it provides you a secondary income, a brand development for the future, and B, you are actually minimizing your expenses right away, and C, it actually set up something new, not for just you, but for your coming generations as well. because brands take longer to develop. And honestly, brand value is a bigger value, is much greater value in the long run than the actual work. Because who knew that Apple is going to be Apple like this? Who knew that? Or even many other brands when they started, whether that is Coke or whether that is any other bigger brand, brands start from a garage. I mean, Amazon, you all know the story of Amazon, how Jeff Bezos started from his garage and all that. So benefit of that is that you are slowly taking this slavery mind where working 8 to 5 to totally independent person who is creating value, creating jobs in the long run. Whenever if you're a doctor and you're starting a practice, you could continue working 8 to 5 if you like that. But if you like to develop your own practice, then of course you have to start from somewhere. And who knows, you set up a practice. I know many doctors who set up a practice and they end up selling their practice for millions of dollars. They just kept their job and they actually sold their practice if they did not want to do it one day. So that's what I'm trying to say, that anything you're doing, you should think about your main focus and job and your secondary focus and job. That secondary thing could be even volunteer thing. If you're setting up a volunteer, you could set up a nonprofit. I mean, I have not registered a nonprofit, even though I do a lot of nonprofit work, because that has its own book management and all that type of things. If you have a discipline and you want to really set up charity organization, it has its expenses too. But anyway, so these are just few thoughts today I wanted to share. I want you to all participate and share your experience, that how would you maximize your net gain and your net brand value in the long run. Till next time, may God bless you.